Good morning. Welcome to First Mover, your first global look at today's action in the Bitcoin, blockchain, and digital asset space. I'm your host, Christine Lee, and joining me are my co-host, Coindesk Managing Editor of Global Capital Markets, Lawrence Luton, as well as Managing Director of International Content, Emily Parker. Hey, Emily and Lawrence.
Good morning. Happy Thanksgiving.
Thank you. Happy Thanksgiving to you. Canadian Thanksgiving for y'all, for all those folks out there. All right, checking in on Bitcoin. The Coindesk Bitcoin price XBX index is currently trading at 56,532. Bitcoin shooting up almost 3% over the past 24 hours. And the Coindesk Ether price ETX index is at 2575. ETH ever so slightly up about 1% for the day. And the new DFX Coindesk's DeFi index is down about 3.5% over the past 24 hours, below that $600 level at 578. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as a leader in crypto news, events, and data. So, Lawrence, taking a look at the markets. And by the way, everyone, Lawrence is now writing the Coindesk long and short newsletter, so be sure to check that out every Sunday. What's the latest, Lawrence?
Yeah, this weekend, even despite this bit of a run up, we're starting to see some action in the options market that suggests that not everybody is keen on the price of Bitcoin. The sale of puts has gone up over the weekend, which is kind of a bearish bet on the price of Bitcoin. That doesn't mean, of course, that Bitcoin can't go higher. Of course, it can, especially if people are taking on those positions or offsetting it with a hedge by buying more Bitcoin. But nonetheless, it doesn't necessarily mean that everyone's going all in, as far as we can tell, though there could be some room up to the upside.
Mm-hmm. And what appears that there may be a breather coming soon, and regulatory hurdles always seem to make crypto a bit hesitant, Emily, and we are hearing that the White House may have an executive report out on crypto soon.
Yes, although it seems like the opposite is happening. There's been a lot of regulatory news and crypto is just soaring. But yes, there is a report. There were reports last week. Bloomberg initially reported that the White House is considering an executive order on crypto oversight. So some of this will be sort of mandating the study of crypto among federal agencies. And we'll talk about that a little bit later in the show. But that, is a very interesting development.
Mm-hmm. Nevertheless, a lot of crypto companies are trying to navigate the regulatory headwinds, including our next guest, the SEC just approving Volt Equity's crypto stock ETF that aims to provide investors with exposure to publicly traded companies with exposure to Bitcoin. And the fund, which will not hold cryptocurrencies directly, will be listed on the New York Stock Exchange under the ticker BTCR. Joining us now is Volt Equity CEO, Tad Park. Hi there, Tad. Thanks for coming onto the show. So we do know of other crypto ETFs out there by Cathie Wood. There's Blockstream as well. What makes Volt Equity's crypto ETF different from what's out there already?
Yeah, we're really excited about BTCR because this is the first time that the fund can focus specifically on Bitcoin in particular. So instead of having a lot of vague language, you notice that the first ETFs like Block, they had to say amplify digital, like that kind of thing. And slowly the SEC has been allowing more and more specific language until now they actually allowed us to say Bitcoin and say that we focus on the Bitcoin industry. We actually mentioned Bitcoin over 100 times in the prospectus. So we're really excited that they let this through.
Tad, congratulations on the approval there. But one question I have has to do with the weightings. You have 80% related to Bitcoin related, 20% for traditional stocks, my understanding. So what's in that 20% that you define as traditional? And of that 80%, how are you allocating?
Yeah, so actually, at least a majority will be in these crypto related things. The reason why there's this other 20%, and there's actually a section allocated for tech in general, is mainly just for a regulatory thing. We wanted to hold companies like Coinbase and Tesla and Twitter, all of these companies that are actually leading the revolution. Twitter allowing for Lightning payments, Tesla holding over $1 billion in crypto, and all these other companies. But according to the SEC's definition, since they don't get the majority of their income from Bitcoin in particular, we actually had to include those clauses that we're investing in stocks, quote unquote. But it did allow us to make the portfolio that we wanted and include some of these big names that we think are leading the revolution.
So I think a lot of people are watching this and asking the big question, which is, is this a sign for the eventual approval of a Bitcoin ETF? So I guess my question is to that end, like, how difficult was this process? I mean, was this something that was like really challenging to get approval for, or did it go through rather smoothly?
Yeah, it was definitely a long process. We started way earlier this year in January, and it still took this long. Usually an ETF can come out within 3 months or less than 3 months, but this has been a long process and a long journey to get here. However, we're really excited that they approved this. I can't say too much on what was really frustrating about the process, because I do want the ability to launch ETFs in the future. But really glad that the SEC finally came and approved this ETF and allowed it to be such a Bitcoin-focused strategy.
So if I could just ask you to completely speculate, just based on your experience, there's some rumors that we may see a Bitcoin ETF as early as this year. Just judging from like however frustrating or not frustrating your experience was, what do you think is the likelihood of that?
So I think the likelihood of a coin-based Bitcoin ETF is pretty much zero. I think in a futures-based ETF, yes, it's possible. And in terms of how much the markets would appreciate a futures-based ETF, that's to be seen. But they did launch a futures-based mutual fund, and that didn't seem to be quite what people were looking for. I'm really excited about BTCR because it actually has the industry. These are companies that are making Bitcoin. For example, Bitfarms can make a Bitcoin for $9,000 when Bitcoin's at $55,000 right now. So it's really exciting to have exposure to the industry. And but I think anything that is passed in the future is going to be good for Bitcoin. If there's a Bitcoin ETF, if there's any of these other ETFs that come out, all of it is bullish for Bitcoin because the regulatory framework is getting more and more open to Bitcoin.
So, Tad, getting back to the question asked before, when you talked about that 80-20 split, within that 80%, you have various companies that are related. Obviously, the R and BTC, I assume, and BTCR is Bitcoin related. How are you allocating that 80% in terms of how much of it is going to mining, how much of it is going to companies that have a lot of Bitcoin on their balance sheet, transactions? What's going on here? In terms of how are you seeing that overall market? Are you weighted one particular part of the sector versus another?
Yeah, that's a good question. So we are influenced by the stock to flow model, and we do take a look at on-chain metrics and generally where we think that the crypto market is going. So we might at one point lean more on companies that hold just Bitcoin, for example, MicroStrategy, and at other times we might hold a lot of miners, but we can offset and kind of offload from that and have more other stocks like Tesla and Twitter if we think that we might be in the overbought territory. So we do a lot of analysis and kind of work within this basket to make sure that we can manage this for our investors.
All right, Tad, finally, do you have a sense of what volumes, what demographics are buying into this ETF, and then what's next for Volt Equity?
Yeah, well, we're really excited about the launch of this ETF. We've had an incredible amount of press regarding this. I think everybody's been waiting for just some news that the SEC is moving in this direction, and we're really glad that we can make it so easy to invest in 20 plus companies that represent the Bitcoin industry. And the easier it is for investors to get in and support the industry, the better it is for Bitcoin. So we're really excited about that. This is the most press interest that we've ever had for any of our ETFs. So we're really optimistic regarding volume. And if people want to know when we're launching, that'll be on voltequity.com, so people could sign up for that. Basically, the market makers were caught flat-footed because they didn't know that we were going to launch this ETF. They didn't know when it was going to be launched. So they didn't make a lot of the moves that they usually do. So that's why we don't know a firm launch date yet. But we're really glad that the first hurdle of passing the SEC has been passed, and we're really excited for the future.
Mm-hmm. All right, Tad. Well, congratulations. It's good to see crypto firms making headway with the SEC, and looking forward to see how the crypto ETF does. That was Volta Equity CEO Tad Park. Coming up, checking in on Asia and crypto markets update with institutional trading firm CrossTower. Time now for the daily forecast, an update on what's happening in the Asia crypto markets. Here's Angie Lau of Forecast News.
Welcome to the Daily Forecast, October 11th, 2021. I'm Angie Lau, Editor-in-Chief of Forecast News, covering all things blockchain. Now, despite a rough start to crypto trading Monday morning Asia time, there were a few notable exceptions, with one token in particular making real ground. That was the altcoin Stacks. It gained over 70% in the past 24 hours to Sunday night. We're going to dive into what drove that surge and a whole lot more coming up. Let's get you up to speed from Asia to the world. First up, while Bitcoin traded steadily down less than 1% Monday morning Asia time, Stacks' recent push into Bitcoin NFTs has seen its price soar. Sunday night saw it hit a high of $2.45 before it settled around the $2.10 mark on Monday morning. Forecast News' Lachlan Keller takes a look at the latest trending altcoin.
Stacks is a smart contract layer built on top of the Bitcoin blockchain. That means it offers much of the functionality of smart contract-enabled Ethereum with the added security of Bitcoin. It does this by running the smart contract application on its own network, but settles them on the Bitcoin network. This allows non-fungible tokens, which have largely been the domain of Ethereum, to be run on Bitcoin. And that's generated a great deal of interest in Stacks' own NFT marketplace. But one expert warns.
Generally, I think it's good from a security point of view. For it to really take hold and for it to really mature, it's definitely going to take more years of development, of research, of education. So to be honest, this rally that saw STX go up by so much, I would say is a little bit premature. And so generally, I think investors ought to be a little bit more cautious.
Various layer 2 applications like Stacks have been implemented on top of the Bitcoin network of late to address some of the shortcomings of the network, notably its transaction speed. For Forecast News, I'm Lachlan Keller.
Meanwhile, Samsung Next has invested over $150 million in Sky Mavis's Series B funding round. While it may initially seem no surprise for a big player like the investment arm of Korea's electronics giant to make such a move, what makes it interesting is the fact that Sky Mavis is best known as the developer of NFT-based game Axie Infinity, and NFT-based games are currently banned in Korea. Forecast News' Danny Park reports.
Samsung, the leading South Korean conglomerate, has shown a lot of interest in NFTs lately, and its latest move was placing $152 million funding for Sky Mavis through Samsung Next. Given the global surge in popularity of blockchain-based games like Axie Infinity, such investments are hardly a surprise, but things are quite different in Samsung's home base, South Korea. Korea's Game Rating and Administration Committee currently refuses to give age ratings to any game developed using blockchain technology, saying that the rewards gained, which may include NFTs, could encourage speculative behavior. But many gaming industry members argue that in-game rewards and items are already being liquidated and traded among users in non-blockchain games, so that's not a good enough reason to stump the sector's growth. One expert tells Forecast News that he thinks the ban on blockchain-based games will be lifted or at least eased in the future.
지금 정부에서는 메타버스라는 이슈 때문에 그 부분들을 포함해서 우선 가상자산의 소유권, 가상자산의 어떤 가치의 이전 이런 부분에 대한 부분들을 굉장히 긍정적으로 다각도로 검토를 하고 있는 부분일 거다. 그래서 그 부분에 대한 결론들이 게임에도 나름대로 긍정적인 시그널을 줄 수 있는 부분이 올 수 있을 거다.
However, Kim agrees with the regulators that the speculative elements which currently exist in blockchain games need to be eliminated for the industry to move forward. For Forecast News, I'm Danny Park.
And finally today, China's clampdown on cryptocurrency mining continues to bite. The country's latest move could see crypto mining labeled as outdated, and that would mean ongoing harsher restrictions for the industry. China's National Development and Reform Commission and the Ministry of Commerce have asked for comment on crypto mining in their latest draft market access negative list document. Now, if the document is passed by the government, policy support will be given to authorities to help further crackdowns. That means investment will be prohibited, no administrative approval will be given, and electricity prices for the industry will be increased. Looks like those tough times are showing no sign of letting up for anyone involved in crypto mining in China. And that's the daily forecast from our vantage point right here in Asia. For more, visit forecast.news. I'm Editor-in-Chief Angie Lau. Until the next time.
The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
All right, time for our live look at Bitcoin. The Coindesk Bitcoin price XVX index is currently trading at $56,705. Bitcoin is up about 3% over the past 24 hours. Taking a look at the Coindesk Ether price ETX index is at 3583, up about almost 1% over the past 24 hours. And taking a look at the DFX Coindesk DeFi index is at 578. DeFi is retreating about 2.75% over the past 24 hours. Joining us now to discuss the crypto markets is Kapil Rathi, co-founder and CEO of CrossTower, an institutional trading firm. Hello there, Kapil. So we see Bitcoin and ETH are advancing, but though I'm also seeing a lot of red in the rest of the crypto markets. What is your outlook? Oh, I think you're on mute. There we are.
All right, sorry about that. Good morning, everyone. Yes, we're noticing some real macro trends. Equities, on the other hand, on one hand, are trading in sideways, still recovering from China real estate fiasco, interest rate fears, while Bitcoin and Ether, some of the macro, more institutional friendly assets, are actually enjoying the upside, primarily driven by the news that's coming out of regulatory world in DC. Other altcoins, I think it's just a matter of sort of correlation. We're seeing a shift from some of these altcoins into Bitcoin and Ether. And coming from, again, we're very focused on the institution side, a regulatory clarity that we have started seeing from DC is helping that push up.
Kapil, you mentioned the issues in the Chinese bond market there. Do you think that some of this bullishness in crypto is directly related? In other words, do you think that money is going out of bonds in China, out of the lending market and into crypto? Or is it a flight to safety, or is the rally primarily related specifically just to Bitcoin and people's outlook for crypto in general?
Yeah, China is playing a really important role. On one hand, we're seeing sort of negative news coming out of China. They are banning cryptocurrencies. Now they are preventing Bitmain from selling mining equipment to Chinese manufacturers. I think overall it's healthy from an institutional perspective. But but a couple of years ago, 70% of hash rate was in China, and that the fact that this hash rate is now diversifying and US is actually benefiting from it is seen positive by our institutional customers. From an equity or sort of real estate market perspective, the decoupling that we have seen in equities and crypto is really positive. Up until September, crypto and equities were sort of moving in tandem. We saw equity and bond market kind of taking a dive, and then crypto went with that. But in the late September, early October, we're seeing a shift, and sort of this non-correlation between equities and crypto, that use case is now playing out where Bitcoin and ETH are seen as hedge.
So you mentioned regulatory clarity from DC affecting the overall crypto market. Can you just be a little bit specific about what you are talking about? Where is there regular clarity in DC?
Yeah, no, that's a great question. I mean, look, for institutional adoptions, of course, we're seeing a lot of institutions trying to come in. One of the main issues that everybody keeps bringing is how is it being regulated, right? So we're talking to traditional hedge funds, $40, $50 billion hedge funds. Everybody's concerned about how is it going to be regulated. Up until last week, there was a lot of sort of nuances. SEC commissioner has his own views. Janet Yellen has her own views. But then on a week ago, we saw Biden administration talking about regulating stablecoin, which is a really huge asset class. And when they talk about regulating it, that means they will put some framework into it. And then the Fed came out asking for comment on central bank digital currencies, which is again seen as positive. And then on last Friday, we saw Biden administration mulling over putting an executive order in regarding crypto. There's not much detail about it, but our speculation is that it will probably lead to in some sort of formation of an agency that will legislate or regulate cryptocurrencies. As long as we keep seeing these positive movements coming out of DC, the market, of course, is seeing these as positive attributes for the asset class.
All right, Kapil. Thanks for joining us this morning and offering your insights for us. That was CrossTower co-founder and CEO Kapil Rathi. Coming up, an update on Bitcoin's liquid sidechain with Blockstream, and checking in with Coindesk Global Policy and Regulation Managing Editor Nick Day.
When we say we want to reimagine money, it turns out we're going to the heart of the matter. Imagination has always been a key part of what money is. Imagination in the form of cultural creativity is also something that the cryptocurrency community has in spades. And to the outsider, that can be a reason to dismiss it as frivolous, as something built on nothing. To dismiss it for these reasons, though, is to ignore that all money is imagined.
The Coindesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
Stablecoins are on the agenda of the Financial Stability Oversight Council, a U.S. regulatory group responsible for warding off dangers to the financial system. Fed Chair Jerome Powell also indicating a report on stablecoins is coming soon. And Bloomberg recently reporting a few details on what is backing Tether's USDT one-to-one with US dollars, the largest stablecoin by market cap with about $68 billion in circulation. Joining us now to discuss is Samson Mow, Chief Strategy Officer of Blockstream, CEO of Pixelmatic, and creator of Infinite Fleet. Hi there, Samson. So before we unpack all of that stablecoin news, we also want to get into Blockstream and their latest updates. So what is Blockstream's liquid sidechain capitalizing on? Or what are the latest updates, and are they capitalizing on the clogging of Ethereum as well as investor demand for alternative smart contract networks?
Yeah, hi Christine, great to be on. Liquid is right now really hot for security tokens. We recently did another tranche of our Blockstream mining node, which was sold out in about 2 minutes, and that was on the Stoker platform, our partner in Luxembourg. Infinite Fleet has a security token as well, the XO token, and also that is going to be doing some more capital raising in the future. But I think right now, in addition to speeding up Bitcoin transactions, Bitcoin settlements between exchanges, you can also do tokenization, stablecoins, like you said, and security tokens. And that's kind of what we're seeing as the big trend right now, security tokens on Liquid.
So, first of all, happy Thanksgiving, Samson. And second of all, do you feel that the side chains on Bitcoin have been relatively slow to adopt compared to, let's say, what's going on in Ethereum and other level ones, et cetera? Do you think that it's kind of been relatively slow for Bitcoin? And what can we do to expand that, to have it grow and adopted more by the general market?
Right. So I would say that the growth of Liquid is pretty steady. It's on par with Bitcoin adoption. So Liquid is just a few years old, actually, even though we started working on it a long time ago. It was only launched in 2018. And if you look at the transaction volume on Liquid to compare with Bitcoin, like after it was around for 2 years, it's roughly the same. So I think we're on a good trajectory. Now, the difference with Liquid is there is no ICO token. The native currency of Liquid is still Bitcoin, just pegged into the network. So we don't have these kind of weird incentive structures as with other blockchains where they mint their own token or they do an ICO and then they can take the ICO money and reinvest in the ecosystem. For us at Blockstream, we can't really pay people to support Liquid or to build things on Liquid. They have to decide to do it on their own. So our ecosystem is fully organically grown. So I would say it's in a very good place right now. And building on Bitcoin, building a sidechain that has confidential transactions and improved privacy are important for the base of a new financial system. So I think we're going in a direction and we're not really distracted by a lot of the ICO mania or DeFi things that plague Ethereum.
Samson, just looking at the overall market, we've seen Bitcoin shoot up recently, especially compared to what was happening over the summer. Everybody sort of has a different explanation for what's going on. I'm curious what's your interpretation for what's been driving up Bitcoin's recent rise?
I think organic demand. We're seeing nation-state level adoption of Bitcoin now with El Salvador. The Michael Saylor and MicroStrategy and corporate Bitcoin buys, that brought us up to one level. But I think nation-state adoption, nation-state mining is going to take us to the next level.
Okay. Samson, we can still hear you, but your picture is frozen. So we'll just continue on. Hopefully, maybe it'll resolve itself. But I also wanted to get into this latest Bloomberg report saying that Tether has loaned about $1 billion to Celsius Network and billions more to other crypto companies using Bitcoin as collateral and billions of dollars of short-term loans to large Chinese firms. What was your reaction when you heard about this report? Oh. I think we've lost Samson, unfortunately. Okay, we could try to, hopefully we can get him back. But in the meantime, maybe we could go to Nick, if that is possible. All right, so let's check in with Nick Day for our latest global policy and regulation update. Nick is also the editor of Coindesk, the State of Crypto newsletter. So, Nick, taking a look at this week's news, we're expecting and speaking of stablecoins, there may be an executive report out of the White House on cryptocurrencies. Do we know anything about that?
Hey, good morning. Yeah, so last week it was reported that the Biden administration is considering an executive order to mandate federal agencies study and provide recommendations around crypto regulation, including stablecoins and a host of other issues. And it's possible it won't be an executive order per se. It might just be, guidance issued to the agencies. But all we really know right now is that, this kind of really seems like a huge expansion of the list of agencies we've typically thought of as being involved in crypto. So a lot of them were familiar names. Treasury Department obviously has been involved for years, but you've also seen, or it's also reportedly going to include the Commerce Department and national security agencies. So, to me, the key thing here seems to be is, this might be trying to coordinate this kind of work. So we've already seen some agencies coordinate their efforts. We've seen the various departments, the CFTC, the SEC, the Office of the Control of the Currency, the Fed. We've seen them, announce research years and years ago, and some of them have formed a sprint team recently, the banking regulators in particular. But this executive order suggests that the Biden administration is looking for kind of a whole of government, top to bottom, everyone coordinating, everyone looking at this, and basically trying to ensure A, who's responsible for what, and B, how exactly are they responsible for that section.
Do we have any idea of the timing of this? And also, it's sort of unclear to me just from the report. I know there's not a lot of details, but is the idea that people are just going to be studying it, or where's is it mostly just telling people federal agencies that they need to learn more about crypto, or do we actually know that it would lead to some sort of coordinated effort?
So far, there isn't any sign that this is going to be, directly leading to regulations, but it does kind of feel like that's the suggestion, right? I think the key part here is the Biden administration is really looking to define who has what jurisdiction, which is an issue that even the crypto industry has complained about in some places, right? As far as, especially with regard to the SEC and the CFTC and who is responsible for overseeing exchanges and things like that. It's an issue Gary Gensler has talked about for quite a bit. As far as the timeline goes, though, it doesn't seem like there is a firm timeline at this point. It, very early stages, or could be happening next week, and we just don't know yet.
All right, Nick, thanks for the update. Appreciate you coming on the show and continuing to monitor what's going on in DC for us.
Thank you.
That was Coindesk Managing Editor of Global Policy and Regulation, Nick Day. Don't forget to sign up for the State of Crypto newsletter on Coindesk.com. So I hear that we have Samson back with us. Samson, thanks for rejoining us. So just before you cut out there, I was asking about this Bloomberg report that was out saying that Tether has loaned out $1 billion to the Celsius network and billions more to other crypto firms using Bitcoin as collateral, and billions more have been loaned out short term to large Chinese firms. I wonder, what was your reaction when you first read that report?
Well, I think that's a pretty bad piece of journalism. It's just trying to find some recycled, I guess, FUD about Tether, because Tether FUD typically will generate clicks. But it's really just conjecture. I don't know where they're getting the idea that Tether's lending to Chinese firms. They don't want to disclose their list of partners for commercial paper lending, but there's nothing on the internet that says they're lending to Chinese firms. It's just kind of this narrative that popped up. Maybe people saw me in Paulo, and because I'm Chinese, they think they're lending.
Samson?
All right.
Samson, can you hear us?
Yes.
Okay, great. Yeah, it cut out. I'm sorry.
Yes, I hear you. Sorry.
Oh, it's all right. Yeah, but one of the claims they made was about, at least in the Bloomberg piece they made, was that they also lend to Celsius. So besides investing in equity, they're also doing lending. They're investors in Blockstream. Do you have a lending arrangement with Tether? Do you know of any other companies that do?
No, the Tether is, actually, Bitfinex is an investor in Blockstream, and it's just a straight equity investment, and there is no lending.
And in terms of their reserves, and you've been a big proponent of what they're doing. Do you have confidence that they have the assets that they claim they have, and that their attestations show? Do you have confidence that those are in fact held? Because one of the other accusations they made was that some of the assets were used to generate income for the company or for some of their chief officers. Do you think that that's what's going on, or do you have any insight into that?
Well, I have no reason to doubt that they're fully backed any more than any other stablecoin. Right now, all the stablecoins are just publishing attestations or assurance reports, but they're all about the same. So far, nobody has done an audit. So if you have no reason to doubt any of the other stablecoins, then I don't really see any reason to doubt USDT or Tether. And I think, USDC also was generating interest through commercial paper lending for some time, unbeknownst to most people. And when that was revealed, they decided to backtrack and stop that. But I don't think it's a weird thing to lend some of your reserves to generate interest. Like, it's part of a business model.
You know, one of the claims that made by we had Congressman Warren Davidson on, and his perspective is that stablecoins like Tether, because they do have that kind of setup where they are trying to generate income, that they should be viewed as securities. You don't agree? Do you think it should be regulated at all, or should it be regulated as some sort of let's say money as a money market fund or any other entity? Do you think it should just be left to the open and caveat emptor?
Well, I think pretty much all of the stablecoins right now, like the big ones, are regulated. So Paxos, USDP, they rebranded, I think, and Gemini, they're regulated by a trust company, by the NYDFS. And then USDT and USDC, they're both registered with FinCEN, whereas USDC is operating in the US, so they have money transmitters licenses, but USDT is not operating in the US, so they don't. So I think on the regulatory side, they're all about the same in terms of oversight. And there is no real stablecoin regulation at this time. I think people are looking towards the government to provide that clarity, but right now they all operate on roughly the same level.
What do you think it should? What do you think that should be? And again, registered versus regulated, they're kind of separate concepts. But how would you, if you were king of the world, how would you do? How would you regulate it? Would you regulate it at all? Do you think that it should just be entirely based on market supply and demand and let it go out to the open?
Well, if you think about it, Bitcoin is not really regulated either. Bitcoin is a software. I think the biggest thing here is that market confidence should speak volumes. There's been a lot of Tether FUD over the years, and Tether has always held its peg at $1. And there are markets on FTX where you can actually short Tether, basically like bet against it. And I think that market, if you bet against it, you lost a lot of money. So I would just say, regulation is okay, but the market confidence should speak more than that, because in light of all the attacks and ongoing FUD, they just maintain their business, they've grown, and they're still the king of stablecoins.
Mm-hmm. We mentioned that Bloomberg report, and in it mentioned that the Bloomberg reporter saw a document showing that they had lent out billions of dollars in short-term loans to big Chinese corporates. Do you see that as problematic or just part of a valid business model?
I think it's a business model. It's short-term lending. That's what commercial paper is. It's very short-term loans, so they're always very liquid. They can get the money back if there are withdrawals to process those. And I think USDC was doing something similar too, and I don't see any problems arising from that. It's just how you want to operate the business and what you're doing to generate income.
Samson, the current environment in China right now with the lending market, given what's happening in the real estate market there, Tether has said they don't invest in Evergrande. We don't know whether or not they're investing in at least their short-term papers and other commercial paper that in related real estate developers or the like. Do you think that there are things that Tether's management can do to allay the fears and concerns or to dispel the FUD? For instance, more disclosures, more clarity, et cetera. Because it seems like they're very, let's just say, almost like purposefully trolling, if you will, the FUDsters by not doing the kind of clarity that would otherwise happen.
Yeah, well, I think an audit would be great. And so far, I'm not a journalist, so I'm just Googling here, but none of these stablecoins have produced an audit, a full audit.
None.
From
You're
very
correct.
Start to end. Pardon me?
Right. There's no audit, but there are things that they can do and say, look, you know what? Okay, granted, let's say the USDC now under a lot of pressure changed their asset allocation, if you will. Paxos never really got into the sort of things that USDC did, but yet Tether continues with their commercial paper holdings. Is there anything that would allay the fear that Tether can do itself that would say, hey, you know what, here's kind of what's on our books. These are the kind of companies, they put out the gradings, they sort of, but is there some more clarity they can provide to let people, not an audit, they don't, it doesn't necessarily mean although they've promised one, but is there something they can provide that would get people to say, okay, you know what, we do have that confidence that this is FUD, let's just walk away, let's stop tweeting about how scary it is?
Well, I think one thing they could do is just say where their commercial papers are held. But the problem there is that now their partners are going to be attacked by the army of Tether truthers out there. So I think Deltic was their banking partner. When Deltic was revealed to be their banking partner, they came under a lot of fire from random internet trolls too. So I think they're just trying to protect their business partners. I don't speak for them. I can't really, it seems like everyone wants to know what commercial papers they're holding. And maybe the answer is to tell people, but I don't know if that makes sense in the business side. But there's this fixation with China. Like, they've said they didn't hold Evergrande, but people are still asking them, like, are you holding Chinese commercial paper? And I don't know, like, when the internet gets interested in next thing, and it's just like a whack-a-mole game. Like, if people are interested in this thing, you have to answer on this area. But I don't know if it's a sustainable model to kind of keep on entertaining people trying to dig into their business.
Samson, we got to go, but I just have one quick last question. I know that you are an investor in INX, which did its STO on Ethereum, and you're big on Bitcoin, but I was wondering, maybe you could explain your thought process there.
Yeah, so when I invested in INX, that was 2018, and Liquid had not yet launched. So that's the answer. And they were already engaging with the SEC to do their IPO on Ethereum because Ethereum existed at that time. But you can rest assured that INX will be coming to Liquid because I'm an investor in INX.
Okay. Thank you very much, Samson. Appreciate your time. Enjoy. I believe you're in Switzerland right now, so enjoy the beautiful Shonen land of Die Schweiz. All right. That was yes. Blockstream CSO Samson Mow. All right. That's it for First Mover. Thank you, Emily Parker and Coindesk Managing Editor of Global Capital Markets, Lawrence Luberton. I'm your host, Christine Lee. I'll be back live at 3 p.m. with all about Bitcoin. Coming up at noon is The Hash. You're watching Coindesk TV.